It's time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Jessica Inskip, Director of Product and Education at Options Play. Thank you both for being here on this Monday. Jessica, before we kick it off, how are you feeling about the market? We have about 5 weeks left. Your thoughts?
Yeah, I'm really bullish until the end of the year. I think the AI narrative is going to really lead to productivity, which is the next catalyst higher, which is what I'm looking for within the data for 2024. But the focus today is really on retail, and there's been some record-breaking numbers. I think there's some interesting data there. The consumer's hanging in there. We've got some Fed speak this week, all that Jay was speaking to earlier. So much to digest, but still bullish till the end of the year.
Right. Okay. That being said, we were just talking about some of the big names, the Magnificent Seven that are still at or near 52-week highs. Amazon would go into that case. Is there still some more room to run here?
Yeah, absolutely. I really think so. So my focus today on the trade picks are around retail because it is shopping season, and Adobe Analytics this morning even said that the online sales grew more than last year, and pricing was a component of that. There was also a headline that grabbed my attention from Amazon, aside from what we saw from Taylor Swift today, is CRM and AWS are expanding their partnership to build more trusted AI apps. And I think that's a piece of Amazon's growth story. They're becoming, they are a behemoth, but they're becoming more of a behemoth, and it's expanding into groceries, into healthcare, and they have such a strategic approach that's going to help that bottom line. And so I think the opportunities lie within AWS and AI, something that we've talked about so many times. And that recent headline with CRM and AWS is certainly attributing to that investment thesis. Additionally, there is Amazon is working with Pinterest as well. So I think that really plays along with those growth opportunities that are there. And additionally, Taylor Swift announced that she is going to release the Eras Tour extended version with a couple new songs that you can rent. And one of those platforms is Prime Video. And that's very important. Those fans are diehard fans, which means that would translate positively into earnings from that Prime Video, serves as a customer acquisition tool for more product penetration, drives to e-commerce. So the way that I would like to play this, though, because you pointed it out very smartly, Nicole, is that AWS or Amazon has really rallied and it's reaching a key point of resistance. And when that occurs, I already own that security. But if you don't, I would sell a covered call at this point. So I'm selling the January 19th, 2024 160 calls. That's going to get me earlier today about $173, but that leaves me room for capital appreciation. That's going to get me about an 8.5% annualized yield over that 53-day period. And that's the way that I would play this from a stock perspective.
Right. Okay. As you said, you already own it, but selling a covered call here, you get that capital appreciation. Your thoughts, Ben, on the chart?
Yeah, Nicole, Jessica mentioned the theme. The focus today is going to be on retailers. I noticed that each of these three stocks we're going to look at very similar in terms of technical, where they are structurally. The technical breakdown is going to be very similar. On a more short term, very much in a trend higher. Jessica spoke to some of the strength we've seen and how Amazon has done very well into the Black Friday, into the Cyber Monday, and some of the strength. I wanted to begin with the more granular time frame, and you can see a big move here. You can see sideways consolidation after it. It looks like we're trying to break out, possibly form something at a higher level, but I went ahead and identified a couple areas that really stood out to me. Again, these are 5-minute candles that we're looking at here. So we're just going back to last week, Tuesday, stock was trading down around 140, 142, big rally up, sideways consolidation around 143. You can see a big move up into Wednesday, and then again, just a bit of balance that's been forming more recently around 147. Not sure if we just extended that upper extreme a little bit and now we're going to kind of widen that range out a little bit, but holding above 147. And this pattern, as we can see again, 5-minute candles, a very bullish, well-defined trend higher. Hey, take a step back with me and you can see another similar pattern playing out here. This goes all the way back to earnings. We're talking about when the stock was trading down around 117, 118, and I identified some of the areas that have formed along the way up. So again, another similar situation here where on this hourly candle chart, you can see a bullish pattern playing out, which supports supportive of Jessica's narrative there. High conviction to the upside, areas of consolidation that continue to hold key levels. We actually saw a big test of this 138 area that held a couple weeks ago, and again, now trying to break out of this range that we're forming around 145. One more step back. I want to show you what's going on because Jessica mentioned into a key area of resistance. I was looking at that, right? This 145, 150 area is significant. I want to show you what I'm seeing here, though, is more of a bottom pattern here, strength off the lows that we saw into the end of last year, beginning of this year. I think once we took out 124, it was off to the races of the upside because we invalidated that trend lower, and basically everything higher has been very bullish. Now, I can understand what Jessica's talking about. This is a high inflection point here, right around this 148, 150 area. It's going to give us something to watch into the end of the year, but bullish across multiple time frames, invalidating a longer term trend to the downside off those lows that we saw earlier this year.
Okay, thank you for all of that, Ben. Really appreciate it. A good look there. Final thoughts, Jessica, on this one.
I love it when the charts match up with the fundamentals and investment thesis. Great chart. I'm really interested to see what Amazon does.
All right, next up is Target. We're looking at Target today, and obviously we've kicked off the shopping season. Year to date, it's down 11%. Your thoughts on this name?
Yeah, so I have to give credit to Jay Woods on this, which is so ironic that he was on before me because I did not know that. We had a conversation about Target before their earnings, and he had it as a bullish call. Digging deeper into Target, they have a focus on efficiency. And it's so interesting because the year of efficiency is not only within technology, but has translated across other sectors, which I think has to do with the AI narrative and the overall investment thesis for 2024 and beyond. But their focus on efficiency is important with their inventory surplus. They're cautious on their inventory stance, and that's going to help expand profit margins, which is extremely important. And they're also focused on the value-driven consumer, and they offered Black Friday discounts earlier, which of course other retailers followed as well. But what's important is the focus on efficiency and the value-driven consumer. We have seen that across lots of economic data through earnings calls. Consumers are very selective and value driven. They've had daily deals under $5, 30% off of apparel, BOGO 50% off of toys, price match guarantees, and there's an average price target of $148.19 for Target, which offers about a 13% upside potential. So the way that I want to structure this trade is I'm going to do a bull call spread on Target, same expiration, January 19th, 2024, going to buy the 130, sell the 145. It's going to cost me $477 altogether with a max reward of about $1,020.
I see. All right. And look, I mean, it's had an incredible month this month with that earnings report. It's up about 19% month to date. You've seen that surge, Ben, in those charts. Tell us a little bit about Target in your mind.
Yeah, Jessica, the fundamentals are equating to the technicals on this one as well. I wanted to begin as we did with our last example in terms of Amazon and talking Target, a similar pattern, and starting off with the 5-minute time frame. Begin with the high conviction trade that we saw. You can see it on the left side of the screen here. We rallied all the way up to 130. You can see last week, and that comes from lower levels. We were down around 112. Since then, we've been a bit more sideways, though, and consolidating. I like to think of this overlapping rotational price activity after a big move up like that as acceptance to the new upper level. And basically, as you can see on this 5-minute candle chart, that upper level coincides with, well, we'll call it right around 130. So again, big move up, high conviction in reaction to earnings, and then basically investors and traders accepting the news and accepting the new level that we established after that big move up. Let's take a step back here away from this 5-minute candle chart. Similar pattern, high conviction trade up, multiple areas of consolidation forming. We've got 15-minute candles here, so we just added a little time to the chart, and you can see again into earnings we were balancing, vertical balance, and just that really well-defined transition from one phase into the next. And you can see it repeat itself over and over again. That's why I like this view of price activity and kind of using this lens to identify these two phases of development, because now we can establish that we've got a trend up over the last couple weeks here, again from 108 all the way up into this balance that we're currently forming around 130 now. Much like what we just talked about with Amazon, that recent rally that we saw up to 130 has taken out significant areas that were established on the way down. So we've got a short-term 5-minute, 15-minute candle chart that's showing us a trend higher, but it's also on the daily chart. I'm sorry, on a 4-hour chart in this instance, it's invalidated a key area. This run-up we just looked at through 124, guys, the trend lower, simply put, is no longer a valid approach towards trading this, in my opinion. Now, we're testing a key area resistance, similar to what we were talking about with Amazon in terms of this big area right here, but I just want to point to the fact that we've got 2 time frames that are signaling bullish type tendencies here, and we're invalidating this longer-term trend to the downside. This is exactly what the longer-term bulls have been looking for.
Yeah, and that's the whole thing. When you invalidate that long-term trend to the downside, the bulls like that one, to your point, Jessica, right?
Absolutely. It's certainly a great chart, but I think it speaks to the broader breadth of the market and the rotation of broader participation within other sectors outside of the Magnificent Seven, which is great to hear for a broader bull case.
All right, next up, Shopify, which basically had record sales, is at 19-month highs. Your thoughts on this one?
Yeah, we've talked about this one before, Nicole. They have a focus on small business, but something that I've been doing a little more research in. So it started with AI. Now it's contributing over to the side hustle culture that has to do with the resilient consumer and that younger type of consumer. If you've heard of that trend called FIRE, which is financial independence and retire early. And there's access to side hustles, or these alternative means of incomes are so much easier than they were in previous downturns. And I think that attributes to the resilient consumer that we are certainly seeing. And the data supporting this thesis. Shopify generates most of their revenue from subscription revenue, and they're seeing an astronomical amount of user growth, hence the uptick that we see within the security. They were an early AI adopter and certainly still are, and they're carving a clear path to profitability, which expands their profit margins, which is extremely important. And their Q3 earnings, there was a lot to like. Their gross margin improved 290 basis points year over year to 52.8%, which is the first year over year increase in over 2 years. So the way that I want to position this one, because this is more of a growth opportunity with the way that it's positioned, is a cash secured put to add it to my longer term portfolio. I'm going to do that by selling the January 19th, 2024 70 strike puts, get as close to the money as I can. That's going to get me about $305. Still have substantial risk potential as I would owning the security, but it's reduced by that premium of $305 annualized over that 53-day period. That's 35%, which is a great yield to get on that security.
Okay, Ben, I don't know. I never heard this FIRE acronym. Maybe you have. Financial independence, retire early. Sounds good to me.
That's right.
Ben, your thoughts?
Yeah.
Never heard that one, but in terms of the audio on this breakdown, we could probably just hit the rewind button and replay the last 2 examples, because we've got short-term trends higher, invalidating that bigger picture trend lower. Let's begin. First and foremost, the big move up we've seen over the last couple weeks. Shares of SHOP were trading down around 60. They've rallied all the way up to 74. I went ahead and identified some of the areas of consolidation. Again, a 15-minute candle chart, and it looks like about 7 areas that were established here at higher and higher levels. I also noticed that each one of the retests of the prior area balance that formed held. So you've got, again, that solidifying the working assumption that value is moving higher. Simply put, trends moving higher, continuation more likely than change, expected to see the trend as your friend, this pattern play out further. Let's step away from the 15-minute candle chart here and add a little time on. We've got the price activity now that we're looking at is since the beginning of November. These are 60-minute candles. So you can see end of October, we were trading down around $45. Stock rallied all the way up again to 74, and just sort of identifying these areas of consolidation. Again, we're stepping back from that 15-minute candle chart into the hourly charts, a 60-minute candle chart here. And let me show you what's going on. You can see currently bouncing around 73, and the way I see it, as long as we hold above 71, very bullish pattern here across the board, much like the other 2 examples we talked about. Both of those more granular and intermediate time frames are signaling a trend higher. Taking a look here at SHOP on a 1-hour candle chart, I wanted to show you what's going on here, because that trend higher is part of invalidating a longer term trend lower that had been playing out. Again, every time we form one of these areas of balance, we're currently referencing the prior area. So when we bottomed out end of October, beginning of November, around 45, we were balancing around 47, and the bears didn't want to see us get below above 53. Look what happened with the earnings. High conviction trade up. We already talked about the move that ensued since. And again, not what the bears wanted to see, but this has been good for the bulls here, Nicole. Another good example of a trend higher.
All right. Thank you both for the big three today. Great for Amazon, Target, Shopify, Jessica Inskip of Options Play, and our own Ben Lichtenstein there on the charts. Thank you both.